Water's good for you guys. Bathroom's down the hall. Just saying. Benefits when you're ready.
Hello everybody, my name is Gage Phipps. I'm the president of the Real Estate Club here on Covina College campus. Just a quick introduction. We have a very special event for our much honored veterans today, and of course the rest of the club members too. If we do have any veterans in the house today, could you guys please raise your hand? Thank you guys so much. We can give them a hand. Thank you guys so much. We appreciate it. So not only will we be helping out the veterans with different opportunities of financial help and providing information on that, we will also be talking about a lot of things that are exclusive for veterans planning to purchase a home. We have 4 panelists here who were nice enough to take spare time out of their lives to come here and visit us today to answer all your guys' questions that you need. Any other officers like to say anything before I go through with the rest of the panel? Introduction, Professor Kim, maybe advisor.
Welcome to the event. This is catered to the veteran audience, but it's also general information about the home buying process for even those who aren't veterans. So please, we have wonderful panelists, Mr. Owen, Ms. Gass, and Mr. Dang over here, who's with Wells Fargo and who's knowledgeable about the home buying process, first-time home buyers and veterans. So, I think at the end of the day, if you have the chance, maybe get their business card and some informational material in the back near Ms. Fields over there. Wave your hand. There's some materials and business cards you could get, and you could contact them directly and personally to them. Okay?
So I'm going to continue to our panelist intro. Thank you, Mr. Kim. Our first panelist member is Jacob Owen. He actually did serve in the U.S. Army. He's a realtor, and he's with Evergreen Real Estate Group. Ms. Kay Gass, she's an escrow officer, and she owns Design Escrow. She will also be talking about title today. Mr. John Dang, he's a loan mortgage officer, well, a Wells Fargo home mortgage consultant actually, and he'll be talking about loans and mortgage and he's a mortgage officer. And Mr. Kendrick Kim, he'll be handling the appraisal aspect of the panel today, but he is also a real estate broker and co-founder of Evergreen Real Estate Group. If you guys would like to give a brief introduction of yourselves and what you guys do, that'd be great.
Like I said, my name is Jacob Owen. I served in the military for 8 years, about 3 active, 5 reserves, 101st Airborne Division, and 350th Reserve Group, actually here in Bell, California. I did 1 tour in Iraq. Like I said, I just got my real estate license a couple months ago. I took the test, I was in the classes all you guys are in back in June, and now working for Mr. Kim over there. I have a couple of referral businesses. I work with Veterans United and with OC Condomania. Just started, it's an internet group that gets basically referrals and leads to real estate agents. So just started out a couple months, haven't done anything yet, but still trying to work with clients, and I'm in particular working with realtors is what or working with veterans is what I'm trying to specialize in. So that's it.
Ms. Kay Gass.
I'm Kay Gass, and I own Design Escrow for 25 years, and I got in business after nursing, not knowing what I was doing, thinking it was just an easy job. Escrow is just a neutral third party that makes sure everybody is protected and all their instructions are met. The seller, the buyer, the lender, the title, the agents. Everybody's got to come to a common time when everything's done legally, and close escrow. I'll tell you more about that later.
Mr. John Day.
Hi, I'm John Dang. I started in the business in 2004 in the loan business in high times when everything's doing good. So I've been there when it's up, I've been there when it's down. And the whole process really starts with the loan officer first, getting pre-approved. So you know how much you're approved for prior to you going out there looking for a home, not knowing how much you qualify for. So I'll be telling you a little more about that as well.
Perfect, and Mr. Kendrick Kim.
Yes, my name is Kendrick Kim. I'm a broker, owner of real estate, Evergreen Real Estate Group. I'm a professor here at Massachusetts College. I'm on this panel because I'm going to be speaking about the appraisal process and where does that fit in the home buying process. I am not an appraiser, I just understand the appraisal process, so I'm gonna give insight on that and how we all fit together in that home buying transaction.
Perfect. Now I'm gonna open the floor up. If anybody has any questions and anything at all for any one of our panelists, just please raise your hand. Choose on you. You can call whoever you'd like to ask and ask them any question you'd like. I'm gonna start off by some general questions just to get everything started. So feel free to raise your hand at any time. Mr. John Dang, what are the minimal requirements for a VA loan for our veterans in the
Minimum
house?
requirements. For VA loans, if you're a VA, you understand this document called a DD 214. That is one of the documents that we will require, aside from doing a regular loan, which has to do with your pay stubs, your W-2s, your tax returns, and your bank statements. And, minimum 620. I saw you nod your head down. So
I'm in both.
you're in the boat.
Been running.
Okay. So is that right a little where you're at right now? Or?
Yes.
Okay. A little bit under, a little bit over?
A little bit over.
A little bit over,
We'll
okay.
be talking.
Okay, definitely, definitely.
For investment properties, how much down payment do you need?
Investment property for a VA, for
Yeah.
a VA. For a VA, we're only supposed to do primary residence only on a VA loan.
Investments?
We do investments on a regular conventional loan. Wells Fargo do have programs for that, 20% down. The VA is designed to, the VA loan is designed to get homeowners, veterans into homes. That's why there's no down payment required. Not necessarily geared towards investing.
Okay, that's good.
Mr. John Dang, if you use the VA loan once, can you use it again?
Oh, definitely. If you used it once, we're gonna look at, if you used it once, we're gonna look at the history to see where's your home now, did you sell it? And if you sold it, then you can reuse your eligibility again.
Perfect, perfect. Mr. Jacob Owen, I would like to know, I know you're new in real estate. How is it your first however months you've been in it? How important is networking and being a real estate salesperson, whether it's networking with other agents or any kind of other, like loan officers, et cetera?
Networking, it really helps. Like I said, all of my referral agents or leads that come into me are because of people that I know, either Mr. Kim or even Kay here, who's a family friend. And one of my dad's business partners hooked me up with someone else who gives me leads. But again, the main thing, that's only leads. It's working with the lenders, the escrow, the title. You need to have these people. I have one client right now who's trying to get a loan. She doesn't have good income, so I'm trying to work with loan officers to find her someone that can give her the loan at the rate that she's for. So definitely networking is like the main first thing you need to do if you get a loan.
Jake, is that person that's trying to get a loan with minimal income, is that person a veteran?
No.
Okay, okay.
I'm hoping to get a lot of veteran leads, but right now with OC Condominium, it's just more the normal.
The reason why I asked that question is because for veterans, there are some down payment assistance program as well too, if they are looking towards putting a little bit of down payment. There's a lot of government grants out there.
I was gonna say one more thing with, but
Am I gonna talk about that here?
Sure, we can talk about that now. Yeah, so I believe there's one that I'm looking at now, that they have a $5,000 grant from the government. It's something that we would have to sign you up, I'm sorry, not 5,000, 5%. 5% of your loan amount.
What's the max I would qualify for?
Okay, for LA County, it's 625,000. But for, depending on the geographical area that you're in, majority of them is at 417. So if you're in a San Bernardino County, then it will be 417. If you're trying to buy out in Ontario, Riverside, those are all roaming around 417.
What's that ratio that's looking at?
Oh, they're very flexible. The VA is very generous. You can go, you know that word debt to income ratio, we can go as high as 55%. Depending on your compensating factor and if everything makes sense. We're not gonna buy a home and be eating cup noodles every day, right? So,
Just make sure I have the card.
definitely.
Okay, my
The
next
floor is
question-
also open up
Oh, sorry,
to,
go ahead.
yeah, not just veteran loans, right? Just,
Not, again, not just veteran loans per se, but Mr. Dane over here is specialized in first-time home buying process. If you're a first-time home buyer, you know, you could ask questions about what's the first-time home buyer process like. Maybe the first-time home buyer process might be better than the veterans benefit that you have right now, sir. Maybe he might get you better deal with the first-time home buyer instead of the veterans, and vice versa. He could do a comparison analysis for you. But then again, like I said, you guys could talk more in detail with your financial situation.
correct.
And
Depends on the property you're looking at too, because my first house I bought, I actually used first-time home buyer as opposed to VA. It just happened to work out, that it was better for me to do that.
Depends where you're buying it too. It is very competitive out here in the LA area. So, Culver City, okay.
Be realistic.
Hey, that's being real, that's it, yeah. So, yes.
Yeah, what do you have to do to apply for the 5% grant?
That's something that we can apply for you. There's a portal that we can go to and fill out all your information. As long as the government still has the money available, that's something that we can, are you a veteran, sir?
No, my son is.
Your son is, okay, yeah. That's something that, we can have him fill out. Go in there and go into the portal, fill out all his information, and he'll be put in line to get granted that 5%. And, we have to put a whole loan package together.
Is there a cutoff date or for application, or is it open year round?
You know what, it's open year round, but they come out with different programs, and it depends on the fiscal year and whatever they have quarterly. If that money runs out, then they'll open up other programs available. But if, your son's, is he still active, or is he,
He just retired, he's in the Air Force for 15 years.
okay, yeah, has he ever bought a home before?
Not yet.
Not yet, so he could use his eligibility. He could use his eligibility, he can even go 100% financing. So that's something we could look into as well. So what happened is Wells Fargo would finance 95% of it, and the other 5%, we can ask the government to step into. There's no repayment required as well. Yeah, so it's a good bonus.
And remember, the questions are open, it's not only for veterans, so if you have any questions about the home buying process, gentlemen over
Yeah,
there.
I'm not a veteran, but, if I co-signed on a loan for a house, does that disqualify me from being a first-time home buyer myself? If I help co-sign for a loan?
Are you currently on the loan now?
No,
You co-signed how long ago?
about 15 years ago.
15 years ago, you'll be considered a first-time home buyer again. I believe it's 2 years, right? If I'm not wrong, yeah, it's 2 years.
Okay, great, thank you.
I have a question for Ms. K. Gass, sorry. I know you gave a brief introduction about escrow, but if you wanna tell us what escrow is, and does everybody that wants to purchase real estate, do they need escrow?
Yes, in our area, they need escrow, and they need title insurance. And the reason is, when you open the escrow, there's an agreement usually with agents, and usually the lender's already involved. And so it all comes together with seller, buyer, and an agreed contract most of the time, unless they do it without. And you have to have an escrow, because first title won't talk to you without an escrow. And I can put in there that you don't want title, but it's very dangerous, because title's ensuring you that all the liens are cleared of the seller, and that any liens maybe against yourself as a buyer, it's gotta be handled and mentioned on the policy. And a lot of people call me all the time, they don't want title, because it can be expensive when the whole thing, but they don't know what's on title, no one does. There could be tax liens, there could be all kinds of liens. You buy it without title insurance, you're stuck. And if you do go outside and something happens with the property, you don't have any insurance. Title insures you from the day it closes back, not forward, back. So they're saying to you, everything's clear, everything's paid off, escrow's done all this, the lender, we've met all the requirements of everybody. Everybody has strict requirements. The lender, the contract, the seller, buyer, title, and we have to follow those and bring them together to close. If If they're not followed and they're not done, we don't close. And the lender, I mean, it's just like, the lender requires certain insurance, and if it's a condo, a different one. It better be there, and it better be the right coverage, or we don't close. It's to protect all of it, really, that's what it is. And so that escrow is just to make sure we follow all the instructions, and titles to make sure that they're covered, so when they close escrow and insure, they're protected, and that's huge.
Can you also emphasize on the term liens for the audience? Maybe they don't know what liens are.
Liens can be tax, IRS liens, state liens, they can be judgments. Somebody could have filed a mechanics lien, somebody could have you had small claims, maybe you had some lawsuit. And a lot of times people say they don't know they're on title, and they don't always tell you. So that's what we do, and that's what title does. And so if your seller, you're the buyer and the seller is these liens, you want to clear so that you get clear title. It's just your loan.
How long does the escrow process go?
Pardon?
How long does the escrow process
Well,
take?
it depends on the contract. You get the real estate contract that's already agreed upon before I get it. Usually John, the lender's involved with the buyers beforehand. And then when they open it with me, I just follow the instructions as much as can. And then they tell me who the lender is, and everybody gets copies of the escrow instructions, a contract, but it's by me. Usually 45 days. It's hard to get it sooner because the lender's got so many requirements too. But we have no time. Let's see. What else?
So it ranges between 30 to 45 days.
Yeah.
Yeah, from the day both parties accept, the seller accepts the agreements, and the buyer, yourself, accept all the agreement of everything on the
So
contract.
it's different when it's all cash involved?
Yes.
Yes, it'll be a little different.
Different. You can
Well,
do it
just
in
to
10
add to
days.
that, if it's all cash, you probably won't need the lender unless you're gonna ask for a refinance cash out
Right.
after you purchase. But usually with the lender involved, they have requirements like, when we get to the appraisal side, is it the appraised value that I'm loaning on? If I'm loaning you $350,000 and the appraiser says, no, it's 320, Mr. Dang over here isn't gonna give you the 350. You either have to come up with the difference if you really want that home at the list price, right? But, we'll get to that part, but other than that, Mr. Dang and the lending process, they meet the specific criteria, and then the escrow puts everything together based on everybody's agreement, from the buyer to the seller, the buyer's agent, listing agent, and all of that, and it comes all together. And then escrow, generally, what Ms. Katz does is she basically takes everyone's, what they want, divides it up between the seller and buyer, and kind of like an accounting distributes the funds here and there, right? And pays off the existing loan of the house that the person is selling.
So the money goes to her.
She'll,
All the buyer's money comes to me,
yes,
so.
and
when
then
they
she
come-
releases everything.
When they come to sign loan documents, when it gets to the end of the process, when I bring them back to the conference room, they always have a look in their eye. So when we get back in, I said, so your first time, how'd you know? Because I'm gonna ask all their money, hard-earned money, and I gotta prove to them that everything's okay to do that.
Now, what happens is like, okay, talk to a realtor, talk to the owner, they're selling the house, I wanna buy the house. They're selling the house for, say, $300,000, and it's like, I qualify for the money, but when it comes to the appraisal, it's only like $275. Do I have to go back to the owner and say, hey, look, your house is not as valuable as you thought?
Yes, the buyer's agent, which represents you, the buyer, would probably say, hey, look, the appraisal price isn't there. My lending officer is not gonna give me the full price to purchase at 300. So can we renegotiate the price to lower it down?
So it's not gonna be me, it's gonna be my realtor.
Yes, yes, and most of the time, the seller and the listing agent means that that's the agent representing the seller, and will basically say, this is what the owner says, they say no. So there's two things that can happen. The lender can either rework some loan package again, or the buyer will just come up with the difference. Because Mr. Deng is not gonna loan at full 300,000 if the appraisal price is only at 270.
So when I talk to a realtor, he's my agent, he's working for me because of my best interest.
Of course.
And that's understood. I don't have to say, well, it's over 275 and he wants 300. He's automatically gonna go ahead and say, okay, we need to renegotiate. Or he's gonna talk to the other realtor that's listing and say, hey, look, what are we gonna do?
Well, basically, on you're not gonna say, hey, I can't get the loan at 300 if the appraisal price says 275. So what can we do? And your agent that represents you will try to negotiate on your behalf.
And, okay, so we negotiated and everything is go, whatever the scope is, he's on there.
That's where this gas, the title insurance will cover and investigate. But before any of that even happens, the agent will look at all the liens that are on the property beforehand, before you even get there.
Well, sometimes they don't show though,
Yeah.
because maybe they had a loan. Legal description, maybe it just didn't show, so you gotta, so you get a preliminary title report about 5 days after you open escrow. That tells who the owner is, tells you the legal description, the address, the parcel number, how much the taxes are at that time. And so that's what I review, and if there's things on there that be taken care of right away, we have like liens or judgments, or not always is it our people, it's sometimes the name's similar. And so then we have to get the social from the seller, and title has to run and make sure. And anyway, it's our job to make sure that those are all cleared, all paid, all ordered before we close.
So when I see you in the conference room with the bright eye stare, all I'm doing is signing and everything is good to go. My
What
house
you're
is
doing is signing the loan docs, but you also, my biggest thing, John, not all lenders are like John, but you wanna make sure what you're signing. Because there's only, you're gonna have loan docs, maybe 80 pages, but there's really only about 5 things that are critical. Interest rate, loan amount, years, if there's a prepayment or not, if you don't see that. And you wanna know and follow through with that, so that when you get to escrow, it's all agreed upon. Because if you get there and you say, that's not what I agreed, it stops the process, and then we have to call. So when you go to a good lender that explains everything to you, you know going in what you're getting. When you come to me, you're gonna sign the legal documents, I'm gonna ask you for your money, and you're gonna bring that to me, and when we got everything together, we close.
So,
But everything has to be done, the title has to be cleared. I have to have those demands to pay off all this, and know I've got the money to do it.
So when I see you, it's like, all I'm doing is like reading, making sure everything is like what I've been told.
And then I'm gonna explain to you how property taxes work, which is a little confusing, but it's really important. Your property taxes are like 1.25 times your sales price in our area. And so that's what your annual property taxes will be when you find your purchase price. So you don't wanna just kinda check that out, and this is almost to the penny. Well, San Bernardino County is a little different, but our area is 1.25 of the sales price. That will be your annual taxes. But I explained that process to you, and what you have to do.
Going back to the appraisal thing that you said earlier, you need to let your realtor know if you plan on using a VA loan or if you're gonna go conventional or FHA. Because when you're dealing with the appraiser, you have to have a VA certified appraiser to appraise the house, and they're looking at more stuff than normal appraisers. If you're getting a VA backed loan, they actually won't even lend for you if there's anything unpermitted unblocked. So if you're looking at a house that has an unpermitted room, there's no way you're gonna get a VA loan on that unless they get the permits, the seller fills the permits and fixes it basically. So you need to let your realtor know when you get the appraiser, if you're getting a certified appraiser or another appraiser.
Mr. Kendrick, Kim, if you wanna go ahead and explain what an appraiser does and maybe how much an appraisal might cost.
Before we do that, this gentleman had his hand up for a while,
sorry
so
about that.
let's.
I had a question about the appraisal. Some sellers, they get an appraisal like a couple months, like maybe say 2 or 3 months, back. Let's say the amount was 500,000, and let's say a buyer agrees to purchase a house, and then say, I think you work for Wells Fargo.
Yes.
Let's say you appraise the property and it's 450,000. Now there's 2 appraisal values. Which one do you use?
We use the one that we use.
Okay, so it's always.
We don't use the old one anymore.
The appraisal is good for that date, so that 2 months ago, from, like, let's say it's April 2016, that appraisal is good for that day. And if you're trying to sell your house 3 months later, you have to do a reappraisal on that. And if there's any differences, whether it's lower or higher, the new one is the one that the lender will use as the appraisal value.
If there's a discrepancy, we are able to rebuttal, and we're able to look back at the last 6 months to see the comparables around the area that was last sold within a 1 mile radius.
Now, the real estate agent would probably make a good case and tell the appraiser that the comparable areas, like houses that was sold around that area that you're trying to make an appraisal on, they look at the average prices pending, which means it's gonna be in escrow and it's about to close, and the closed sales within the last 6 months in that circumference of an area. And if that's a high price, more than the appraisal price, then you can make an argument for reconsideration of value. And the lenders could do that as well. But the buyer's agent should probably take the lead to assist the lender on doing that. But most appraisers, they're not gonna undervalue because they know what they're doing. And these days, the experienced appraiser has probably worked the area that they're doing appraisers on, right? So it shouldn't be that significant of a difference. You're never gonna see today, as you did back 10 years ago, like 2008 and 9, where the appraisal price is 270 and you're trying to list it at 300. It's not gonna be that big of a difference. Now it's a little more, streamlined, and they're sending appraisers who know their area, so it's not gonna be a discrepancy.
Is there a difference between a veteran appraisal and a regular appraisal?
Well, yeah, like as Mr. Jacob Owen said, the veterans appraisers, they have a little more specialized technique, look into more things. And even with FHA loans, I'm sure that's probably changed, but if there's some things that need to be fixed and the seller doesn't wanna fix it, then either they can't get the loan on the regular FHA, or they have to add an FHA 203K, which is a rehabilitation loan on top of their regular loan. So appraisers would consider that okay if it's fixed, or if it's gonna be used to fix things, right?
And how long, or if anybody has any questions? Nobody? How long are appraisals good for?
From my understanding, appraiser is good for, expires within 60 days, give or take. But, don't quote me on that because I'm not an appraiser, right? But anytime that you get an appraiser to appraise your house, and then you're thinking about selling your house, and it's like 3 months later, then that appraiser is no good. They're gonna have to do a new appraisal again. Especially if you're gonna use a loan officer to get the loan on that house, right?
Now, do you have to sell your house for the price that the appraiser gives you? Or why not?
Well, it depends on the seller too. Some sellers, for example, they got a job in Arizona and they need to be there like yesterday and the house isn't selling. And maybe the appraisal price is about $20,000 under. And the seller may be desperate because he needs to be in Arizona like yesterday to start his new job, so he'll probably sell it at the appraised price, right? That's probably one of the main reasons. Or, unfortunately, if you're getting a divorce, you don't want to see your wife or you don't want to see your husband again, you just do a fire sale just to not see each other anymore. So they'll probably just sell it as quickly as they can. That's probably one of the few unfortunate reasons, right? Or there was a death in the family and they just need to sell it because they can't deal with it.
Perfect. Any questions?
Me again. What are the fees associated with the loans? Which ones are negotiable?
For VA loans, there is something called the funding fee. So for VA loans, there's no private mortgage insurance like the FHA has, or in any conventional loan, even with less than 20% down payment, they would have a mortgage insurance. But for a VA, there is a VA loan, there is no mortgage insurance, but there is something called a VA funding fee. The VA funding fee, the percentage on that is 2.150 of your loan amount. That is something that they will collect. You can add that to the loan as well on top of your loan, so you can finance that.
Can you pay it up front?
You can pay it up front if you would like to. And that is in lieu of not having private mortgage insurance. That's in lieu of not having any down payment.
I have a question for Mr. Jacob Owen. Do you have any advice? I know I am, and some of us here are trying to be realtors in the near future. Do you have any advice for new beginning realtors that maybe just get their license, or maybe some advice on prep for the real estate salesperson exam?
Yeah, taking classes at Citrus were the best for me. I took 2 of them here, and I took 1 online course, and I didn't feel that I got enough out of the online, so what you're doing here at Citrus is really good. And then, secondly, when you're actually filling out your forms and stuff, I remember when I was in Professor Kim's class, he kind of told me how to do it, but it was older, they changed stuff every year. The stuff I went through a couple months ago. I still have all the documents saved in my computer. I'm helping someone get her license soon. I'm gonna send her all the information. So if you need that help, grab my card, email me, I'll send you all this stuff. And if any of you are veterans trying to get your real estate license, don't mess up like I did. You put down on there that prior service basically, but I did not include my DD-214. So they kicked it back to me saying it was incomplete. But if you send in your DD-214, they actually give you a military expedite. So when I went for my classes, they said it was gonna be about 2 months before I get my test date. I got it in 2 weeks. So definitely include your DD-214 to get a sooner test date type of thing. And then as far as like prep goes, definitely do a live crash course. I know it's like $160 is what I paid, but it's a whole day from like 8 to 5. They do nothing but just cram. And when I took the test, I'd say 60% of the stuff that I saw on the test was stuff they had just talked about yesterday. So I had to take an online class, so between Mr. Kim's class and then actually taking the test, there was still like a month and a half, so you know you kind of lose a little bit of information, so it's really good to have that the day before your test go and cram, basically. So, and again, I talked to you, for my crash course, they give you both PDFs and then also the live part. I have all of the PDFs in my crash course, so if you just wanted to read over those without taking it, I could give that to the club, and that's something you guys could use too.
I'm sure a lot of us would love that. I can see the improvements with front.
And also, like Jacob said, basically take my classes and you'll be fine.
He's a
Alright?
great teacher, I can vouch for him. And he's not paying me to say that either.
Yes, sir.
I know this may seem like out of nowhere, but do you guys have any recommendation if my community per se is having financial problems, which is preventing us from having typical repair on certain items?
What do you mean, like?
Because like I'm having problems with say a fence which is just got cleared of termites and all that, and it's still damaged, and it seems that my community is financially incapable of.
Does a fence lie on your property line, or is it shared between you and a neighbor?
It's shared between me and a few neighbors.
You might want to ask us to pull our resources together. If no one's complaining, I just leave it as is until you can fix it.
Mm.
But
You're renting, right?
Yes.
You're renting. I did property management, and don't quote me on the exact days, or the exact times. If it's a repair under 1 month's rent, you can do it yourself, save the receipts, and they'll take that out of your rent for your next thing. So like if it was gonna cost $10, you save the receipt for $10, and then when you go to pay your rent, pay $10 left and send the receipt in, and you're allowed to do that 2 times within a 12-month period. You can double check online, but I'm pretty sure as long as it's, you know, less than 1,000 or 15, whatever you're paying, you can do it yourself. You just gotta keep the receipts and send them to your property manager.
Thank you.
Yeah, usually when you tell them that, it kind of lights a fire under
Yeah,
them,
you have to
because
tell
they
them you're
don't
doing that
want you
first.
to have to, they don't wanna have to like not have you pay the full amount of rent. So as soon as you tell them, hey, if you're not doing this, I'm gonna do it myself and I'm taking off my rent, they're like, oh, no, we'll do it. So just tell them that that's something that you wanna do and they'll get it done within,
Okay.
but by the
You
time
have
your
to
rent's due.
let them know before you do it. They have to have, I think, like 30 days notice, and then if they don't fix it, you're good.
You had a question?
Mr. Owen, you mentioned a little earlier, if there is unpermitted work, a VA, you can't get a VA loan for that?
Not until you get it fixed.
Sure, so if someone's selling a house and they have on the description that it is unpermitted and you qualify for a VA loan, that means you shouldn't even look at that property?
You have to talk to the seller and get them to fix it, and if they refuse to do that, that's why I was telling you, you can still go conventional or FHA, but the VA back loans, they're not gonna do anything with that. So that's why you let your realtor know what you're looking for, and again, that's one of the reasons why when I first bought my home, I had to do it conventional or FHA, whatever I did, because I had an unpermitted bedroom on the back, and the VA wouldn't touch it. those are just things that you have to look for, and if you let the real estate agent know, he won't even show you the ones that you can't get, basically.
Go back, Mr. Dan, you said DD-214 tax return, how many years tax return?
2 years tax returns, 2 years W-2, 1 month pay stub, 2 months bank statement. And a certificate of eligibility if you have it. If you don't, that's something that we can retrieve as well. And going back to the fees, Wells Fargo don't charge anything for a veteran. Wells Fargo part don't charge. We don't have any application fee. So the VA does collect their 2.150 for the VA funding fee, but Wells Fargo don't charge anything on that part. Aside, escrow is going to charge their part, title is going to charge their part, but there's nothing on with Wells Fargo.
Ms. Gass?
Yes.
What are your fees gonna be? Just.
What are our fees?
Yes.
It's 1.75 times the sales price with 175 days. So that doesn't mean too much to you, I'm sure, but we haven't raised them in 25 years, and we're probably one of the lowest, because most of them are $2.50 to $3 per. So if you're shopping around, you wanna ask, what's your escrow fee, what is it, $2.35? It makes a big difference. And then there's a time fee for the loan documents, getting all that done, and you signing that. And, on title, you pay on just what your loan amount is. The seller pays the biggest part on the sales price. And if it's cash, you don't pay, you don't have title, you're covered under the sellers, but you're not charged for it. And then also I wanted to tell you that the contract is a contract, but after you open escrow and you wanna change your mind about something, you want something fixed, you want whatever, and all parties have to agree, the seller and buyer have to agree before I can amend it, but it can't be amended to change. So you had an inspection and they found something that needs to be fixed, but it's not in the contract, but they said they weren't gonna do any repairs. So you have an option to go back and see if they'll agree. Once they do or don't, they'll tell me, and if they do, I draw an amendment only after everybody's agreed. Always, can never be one-sided.
Mr. Kendrick Kim, since you are a real estate broker, would you like to inform them maybe how, if anybody's interested in becoming a salesperson or a broker, how to do that?
Well, if you like to become a salesperson, you need to take real estate principles and practice, and a third class, which we offer here as either escrow or legal aspects of real estate. We also have here finance and appraisal classes now. What else? We have a skills award here on campus, so you could get a skills award, put that on your transcript. We're gonna offer the certificate and associate's degree eventually here at Citrus College campus. But if you're a business major in general, I think the real estate classes would definitely complement your business major. Because in real estate, you pretty much have to do everything from your accounting, because you're self-employed. You're also gonna have to do the marketing, because you're marketing yourself, right? And you're gonna work with a lot of people, buyers or home sellers. So you gotta learn a little bit of psychology on the fly too, and dealing with different personalities and people, right? Most of the common questions I usually get from buyers is, how much do I have to pay you to help me look for a home? I tell them, you don't pay me anything. I'm doing this as a service, and I get paid by Mr. Owen, the listing agent, who represents the seller, and I negotiate my commission with him. And buyers get really surprised by that. And a lot of buyers out there, whether you're a veteran or just the general public, most of the questions I get as a real estate broker is, I wanna buy a house in Newport Beach, so let's go buy the house, let's go take a look. And first thing I ask them is, do you have a lender, and do you have a pre-approval letter? And that pre-approval letter means that you are guaranteed that $350,000 or $500,000 loan, so we can specifically look in areas with that amount, right? And the lender will work with you in terms of how you get pre-approval. He's gonna not only just check your credit score, but he wants to see your bank statements. And if you say you're the CEO of Chick-fil-A, he wants to see a letterhead saying, Michael Andrews, CEO of Chick-fil-A, and he's been here for how many years? Along with your tax returns and W-2s, right? Those are things that buyers have to think about. And then, oh, how do I fix my credit? How do I do this? Well, there's a lot of government loan programs that many loan officers can refer you to. Credit counseling even, right? Mr. Dang here with Wells Fargo, they have a lot of consumer credit counseling information for the consumers. And at the same time, just how to fix your credit, just some tips, okay? But the main thing that loan officers and many real estate agents will tell you, when you're in the process of buying a home, and if you have that pre-approval letter already with you, do not co-sign anything for your brother, sister, mother, while you're getting that loan from Wells Fargo. Why? If you co-sign anything and you add more debt to you, then Mr. Dang over here is not only going to be angry with you, but he has to start the whole process all over again by looking at all the debts and income all over again because you co-signed for your mother or sister or father or whatever, right? And a lot of people don't know that, and they just think, well, you know, it's my sister, I'm going to co-sign, and I've lost that timing that we're about to close, and now we can't close because the loan officer told me, yeah, your client co-signed the loan, I have to rework the whole loan package again. And we're out, and we have to spend another 6 months looking for another property because the buyer co-signed for somebody else.
Or got into more debt.
Or got into more debt during that time.
Charge cards, buy a car.
Yes, don't do that as a home buyer. As a home buyer, within that time, until you get into your home and escrow has closed, you can do whatever you want with your credit after that, okay? All right? But during that time, you have to be like an angel. Don't do anything. You want to buy that, you know, Cuban cigars? Don't. Thinking about, okay, I can't because I'm in a home loan process, right? Mr. Andrews, you want to buy that BMW? You can't. You're in the home buying process, okay?
And the car one's the popular one.
Yes. Also, another thing, if you're in a W-2, which means you're working a 9-to-5 job, Mr. Dang will probably go into this, but if you all of a sudden have an increase in income by, you got a promotion or something, you need to notify your lender, like Mr. Dang, and say, hey, I got a promotion, my income has increased, and not only that, here's a letter from my boss saying that I got a promotion, and it's all in the paperwork. If you wait till last minute and they found out later, you're gonna have problems. It's just gonna prolong the loan process. And then when Mr. Dang's not happy, I'm not happy either. You're gonna owe me lots of Starbucks coffee for doing that.
And the seller's not happy.
Yes,
Nobody's happy.
yes. Mr. Owen, who's representing the seller, is gonna probably buy him a steak dinner at
Yeah.
Norton Steakhouse. Right?
Pre-approval letter, how long is it good for?
Pre-approval letter, we're good for about 120 days. So we're gonna ask you for some documents up front, and we're gonna do an income analysis, see how much you make, check your credit with your permission, be able to see your debts, how much you owe, and kind of find out what's your debt to income ratio, that's what we used earlier. And from there, be able to tell you what's your buying power. Issue a pre-approval letter pretty much the same day. You can get all the income documentations as soon as you can. And then once I issue that pre-approval letter, that's where you bring it to your real estate agent and you tell them, hey, here's my pre-approval letter. I'm approved for $500,000. I want to start shopping.
And here's a tip for students I see in the audience. Your credit card debt, right? Let's say you have like 3 credit cards and you got like $5,000 credit limit on each. Do not go out there to Pokemon stores and start buying all these Pokemons and maxing out your credit line, right? Why? If you have a $5,000 credit line, you want to only use at least maybe 10 to 20% of that credit line and keep the remaining balance, remaining available credit high. Why? Because that affects your debt to income ratio when you're trying to look for a home. Credit card companies report to 3 credit reporting agencies: Equifax, TransUnion, and Experian. And what they look at is your payment history and your available credit. That's almost 65% of your credit score that's affected. So if you're making monthly payments consistently for 24 months and you have no missed payments, that could increase your credit score. If you got a $5,000 credit balance and you're only $5,000 credit limit, and you're only using about $1,000 max, that could still increase your credit score because your available credit is really high. If you're like me, when I was a freshman who had $5,000 on 10 credit cards, maxing out all the $5,000 on each one, that's how your credit score goes bad. And then being an idiot by actually opening up more credit cards because you want more free money, which was very lax during the 1990s, that could really also help, that really affect your credit score as well. And then Mr. Dang over here, lenders will probably not be too happy in giving you any loans with that high of a credit debt that you have. And they're not looking at just the credit score anymore. They're looking at the debt to income ratio and everything else. You could have an 850 credit score, but if you got so much debt, they're not gonna give you a loan. Think about that now as college students. So when you keep saving and keep paying off that minimum balance, increase your credit score, and understand that, okay, this is what I'm doing now for my future, then someone like Mr. Dan could really help you buy a home and give you the best interest rate as possible based on your credit score and your debt and your income ratio. Okay?
Do you have any questions for them?
Alfredo?
Oh, go ahead.
I had a question on, is there a price to get that pre-approval letter? Does it cost anything?
No, there's no, it's completely free. We're here to help, we're gonna find out, you know, we're gonna get some document and some information from you. Okay, we're gonna do it within an hour.
And those are up front, right? You just walk in and ask if you want pre-approval.
Correct. Yeah, so if we get your information, we'll send you a list of items that we'll need, and as soon as you get all that, you can scan it, email it, fax it, meet in person, whatever's convenient for you.
Question. Shopping for like loans, kind of like increases your credit score. So what's your advice on that?
Don't pull your credit everywhere. Once you find out how much you owe, what's your credit score, work with that, and if you're shopping for it, and you go into other lenders, other brokers, then you already know how much you owe, you already know what's your credit score. Give that verbally to them, tell them don't pull your credit.
Will they agree to that? Because I've done that with buying a car. It's like I walk in there and the first thing I want to know is like, what's your social? It's like, I know what my credit score is. All I want to know is like how much the car costs. And I can't even get the price of the damn car. They want, what you want your monthly payment to be? I want to know the price of the car. I want to figure out what I'm going to pay monthly. I don't want you to tell me what I'm going to pay monthly. So that's the issue I have when I go over there shopping. It's like, this person wants to check it. They don't want to give me any information until they check it.
Well, just know that Mr. Dang and I and Ms. Gass over here are real estate professionals, right? We're not car salesmen, so you won't get that from us. Trust us.
They want to come and say, hey, this is my credit score, and this, I bring you my documents, and this, I can give you like a rough idea of what I qualify for.
Mr. Dang can do that if you know your credit score, and he's very helpful with consumers. Now, if you come to me, I'm gonna ask you for Starbucks first, because you're giving me a hard time.
Now, Mr. Kim knows me, I sold cars for 5 years. Buying a car is very similar as to buying a house. Yes, you're buying a $25,000 car, $30,000 car, but when we ask you for that information, it's because we wanna make sure that you can qualify for what you want. Because anybody, I had a lot of customers when I first got into the sales business, a lot of customers that I wasted a lot of time with, by the way. I would spend hours and hours test driving vehicles that they could not afford because I was like, well, I just want to show them, I want them to like it. And at the end of the day, they came in saying, I want to test drive a BMW, I want to test drive a Benz, I want to test drive a Porsche, I want to test drive this, but hey, you only qualify for the Nissan Sentra. But I spend all day test driving Benz, Porsches, and Beamers with you. How am I gonna possibly get you now into a Nissan Sentra when that's what you financially qualify for, when I had you fall in love with the Benz, Porsche, and the Beamer? It's not gonna work that way. It's the same thing. When you're financing anything, we need to run your credit. We will ask you, well, you know, because your credit score can mean many different things. You don't only have one. You have 3 different scores. So as a person in sales, we're gonna think like, okay, you can be coming at me with a 650, 700 credit score, but if something else is on there that the financing company does not like, they're not gonna approve that loan, or they're gonna give you conditional approval where they're gonna ask you for more money down and it's gonna be at a higher rate. So buying a car is very similar to buying a house. It doesn't take 30 to 45 days, but the only reason that we ask you, you know, okay, after getting to know what you want, what you feel comfortable with paying, the only reason we ask you like, okay, let's go do financing now, is because we wanna make sure that we can get you something that not only fits your needs, fits your wants, but also fits your budget. It's the same thing with buying a house. You wanna make sure that your customer is overall satisfied with their monthly payments, because it's like what you said, Mr. Day. We wanna make sure that you're able to put food on your table, because it's real nice when you're driving around in a BMW, but if you live in an apartment with 12 other relatives, that doesn't matter. We don't care about that. So it's one of those things where we need to make sure that your financial, or your wants also meet your financial standings.
It's
So-
agreed, but I believe that from just the home buying process side, I think most consumers, they're gonna be honest with Mr. Dang and saying, look, I ran my credit, I have all this information, and
In
they'll
a
probably,
perfect world, I would totally believe.
they'll
you,
probably
but-
tell the truth most of the time, because they're serious
That's the
home
thing,
buyers.
a lot of people don't understand though, that your credit score does not always determine what your financial standing is, because you can be really good as far as making payments on time, but if you have a lot of revolving credit at the same time, they're gonna look at that as a point against you. So it's one of those things that anytime that you're financing something, or anytime that you're looking to go to a lender to say, hey, I need you to put this much down for me, and I wanna make this much of a monthly payment, they have to make sure that you're within your means. So when you go buy a car, when you go try to finance anything, Best Buy is gonna do the same thing. If you try buying a $1,300 laptop and you wanna put it on financing, they're gonna run your credit too. Because it's one of those things where anytime you're financing anything, you have to live within your means, and you also have to realize that you're asking someone to put money up front for you, and you're asking them to have this blind faith in you, which, you know, look at our economy right now, it's barely on the pickup right now, so it's like really, we've kind of been conditioned to know that people do not really know how to handle multiple payments, and people do not really know how to live within their means. So it's one of those things where, you know, you could want the 6-bedroom house, but hey, if you only qualify for the 3-bedroom, 2.5 bath, that's what you're gonna get. You can huff and puff all day, but I have to check your credit. If this comes back at this, that's all you're gonna get. And if not, you have to come up with that extra down payment. But if you can't even qualify for that house or qualify for that car, I'm not even gonna ask you to come down with that extra down payment. So it's one of those things where you also have to understand that running your credit, going through anything through a financing company or a lending company, they're gonna ask you for that, because they wanna make sure that you're living within your means, and they're not gonna get screwed over in the meantime. So
let's
it's,
just hypothetically say this gentleman already ran his credit, went to ABC Mortgage, and did the whole 9 yard. And now for whatever reason, he comes to me and say, hey, John, I already ran my credit. I already know what my credit score is. I already know what my liabilities and debts are. Okay? I don't want you to hurt my credit. I don't want you to run it again. So, okay, great. Tell me what's all your liabilities. I'll jot it all down. What's your income? And from that, if he's not honest with me and I'm calculating it wrong, that's really him. Because after I'm done on my part, he's gonna go shop for a home because I haven't ran his credit yet. But I did a manual income calculation. And
but
I
eventually
said,
that is a step that you have to take. Running your credit, if you wanna get approved for any financing, eventually that's,
Yeah, of course.
you have to do that. So, I mean, I'm not saying go run your credit all around town, because those are points against you, but if you're actually serious about wanting to continue the process, you have to be open to people running your credit. So it's, you can't look at it as such a negative thing, because without this one step, nothing after that is gonna happen. So, my biggest advice to people, even when I sold cars, was if you're not ready to run your credit yet because you're not confident yet, you shouldn't be doing this yet. Because this is something you have to do. This is something that, unless you're coming up with cash, I need to run your credit. I need to know your income, and you need to be honest with me. Because half the time, I would have customers lie to me, and then the financing company would come back and say, hey, they only really make this much. And then they're asking for stipulations, they're asking for proof of income, they're asking for proof of all these things, and then it turns out like, oh, I actually make $3,000 less than I said a month. Well, dude, now I gotta start over from the beginning, and it's just like, it's one of those things where it's honesty, but it's also coming to the realization that you gotta do what you gotta do. If you wanna buy a house, you gotta run your credit. If you wanna buy anything, you wanna finance anything, you have to run your credit.
you're right. But when I wanna go buy the Honda Accord, I already know they have white, silver, black, and I can just go there, pick that out, pick out the model, and that's the one I want, then I'll run my credit then. But for it, in this case right here, he already ran his credit with ABC Mortgage, he wants to come to me, I'll do his manual calculation, I'll tell him, hey, you're approved for 500,000, and it's shopping for a home, it's not something that we're gonna find overnight. The process might take 1 month, 3 months, 6 months, or even a year, until somebody finds the right one. So perhaps 6 months later, he finds the right home, down the street in Culver City, right?
Yep.
He finds his home in Culver City, regardless 3-bedroom, 3-bath, or whatever the case may be. And now he's happy with it. All right, John, let's get the process going. So I'll run his credit and everything. And if he was not honest with me in the beginning, hey, you just wasted 6 months of your time, and that home that you fell in love with, that's it.
Yeah, you can't get it.
You can't get it.
You also have to consider this though, that most real estate agents out there, without the pre-approval letter saying that they are not only disqualified, but the loan officer is giving them that $500,000, once you find a home, the agents are not gonna do anything. Why? Because it's a waste of their time, you know, and no one's gonna accept the offer without that pre-approval letter saying, Mr. Michael Andrews, pre-approved for $500,000. So me as an agent, I'm not gonna show you any property. Either you go get the pre-approval letter, or we just sit here and just look at each other all day, right? So Mr. Dang is running your credit, a soft credit, it's called a soft credit, where it's just giving you information based on the information the customer gives him. That's great. But Mr. Dang also knows that most real estate agents aren't gonna waste their time, gas, and money taking on a buyer who has no pre-approval letter. And even if you get a pre-qualification for the loan amount, that's like a 50-50, depending on the agent's personality and their business model. But for me, you come to me with no pre-approval letter, we're not going anywhere. You can sit here and watch me play on the computer all day, right? But if you come with me a pre-qualification letter, and if I know you, Mr. Andrews, I'm gonna tell you to go back to Mr. Dang and go get that pre-approved letter, which means you're gonna run a hard credit with him, giving him all your financial information stubs, and here you go, you've been pre-approved. Until that happens, agents are not gonna move, especially the new generation of agents right now, because they don't wanna waste their time and gas, okay?
As far as in real estate, you know, investing and stuff, what would be the best legal entity for passive and active? If anybody.
You mean if you wanna be an investor and
Correct.
you either form a syndication or a LLC, basically,
Right.
to protect yourself from any personal liability. So they can't come after you or your family. It's under a corporation, LLC, right? Limited liability company, something like that.
Would you put that in your active or as your passive? Which one for you?
I'm not sure, you might wanna talk to an attorney on that one, right? But all I know is that if it's a corporation, you protect yourself from personal liability, right?
Anybody else
But
have
can
a
you
question?
get a loan as a corporation? I think Wells Fargo can answer that if you
Yeah, if anybody can
if you
answer.
want.
We don't generally. We
Generally?
put it under you personally first, and then you can do whatever you want with it afterwards. You can have it all switched to your LLC or corporation afterwards.
Now, one of my students asked me, if I'm a W-9, independent, self-employed, how can you run my credit and determine my debt-to-income ratio when I'm not really having solid income monthly because it's not stable? It's I'm basically self-employed.
So I'll look at your 2 years tax returns to do an average from that.
But, you know, most self-employed people, they want to pay less taxes as minimum, so they show either a negative or no income at all. So what would you advise them to do then if they really want to get a home?
You don't want to pay Uncle Sam, and you won't qualify for a loan. That's the thing.
Did you hear that? So if you're self-employed, you want to show less possible income to not pay the taxes, great for you on the tax bracket, right? But if you want to buy a home, most likely you're going to probably tell them you're going to have to redo your taxes and show that you have income for the past 2 years, right? And then at the same time, you're going to have to rework with the IRS, right? So it's kind of like, you know, what do I do if I really want to buy a home? So you have to think about that as well, okay?
Anybody else have any questions regarding a home buying process or anything like that?
Coming from a frugal background, where credit cards are considered a thing we use, mean, like, if they have a stable income, but they just, don't use credit cards.
Your question was, I'm sorry,
My
your question is,
question is it necessary to have a credit score to, buy a house?
correct, yes, you'll have to have substantial credit in order to buy a home. The reason why is because your credit is what determines your history of how you make payments and your habits of how you make payments. If there's a bunch of lates on there and you have a credit card and you pay and you're late all the time, then we're gonna see a trend of that. Your credit score is gonna be really low. And
I think what he's trying to say is he has credit, but not in traditional credit in sense of like multiple credit cards, car loans or anything like
Okay.
that. But maybe he has credit on utilities and all this other stuff, but he can't show like car payments. Is that what you're trying to say? Like, if you don't have the money, you're not using credit, or you don't even want to use credit, you either just pay cash or check. And how can you get a credit score or have some credit history without having a credit card? Is that what you're basically asking? Is there a way for you to do some alternative credit history findings if they don't have any credit cards or car loans per se?
we do. Did everyone get a folder on the way in? No?
There are folders in the back, Michael.
Yeah.
Mr. Chen, can you pass this to the audience, their
Correct.
folders?
There's actually a printout in there, if you can help pass it around to everyone that didn't get one. So yeah, we do take alternative credit trade lines. We could look at your T-Mobile cell phone bill, that could be considered a trade line. Your gas bill, your water bill, whatever's under your name utility-wise, that's considered a trade line. And we can use that towards your credit as well.
For that, would you have to backtrack 2 years still? Like how you would for?
No, we'll look at the trade lines, maybe 2 payments or so, 2 months, 2 consecutive months, most recent.
Thank you.
Yeah, no problem. So in the folder right there, if you guys want to open it up, there's one of them. There's one printout called Your First Mortgage. That's the program that I was talking about in regards to using non-traditional trade lines. So we're able to use that. This program is catered to get people into homes. It's a proprietary product only Wells Fargo has. It's minimum 3% down payment. So for those of you that's not a VA, this program would be good for first-time home buyers. 3% down payment. You can get gift from parents as well. If you have a job, perhaps you're a waiter, a waitress, or a casino dealer, and you get your cash driven, you get tips. You can deposit that you can use that as your down payment as well.
Mr. Owen, you might want to talk to Mr. Yang about that, because that's something very similar. Sorry to call you out on that.
I have one question. Based on what you were saying, if you have a 700 credit score, what if your credit report could be eliminated if you're not getting a loan?
Bankruptcy, foreclosures, any kind of liens and judgment, child support, spousal support, whatever's on there, that can trigger something as well.
When he says all of those factors of judgments, bankruptcy, you're not gonna have a 700 credit score unless it's been eliminated after 10 years from that bankruptcy time, right? But you could have a 700 credit score, but you have so much high credit balance, but not enough available credit. Like I said in the example, students have $10,000 credit line, but they're using like $9,999 and have only $1 left as available credit. That could significantly affect that debt to income ratio that the lender, Mr. Deng, would probably be looking at. And your payment history. 2 years you made payment, but then all of a sudden, on the 25th payment, you missed it because I'm tired of paying just the interest. I'm gonna wait for the 26th month to pay it all off. If you do that, that dings your credit score too, because it shows one late payment. You wanna have a consistency of making payments on time with no late payment history. And you wanna have a very low credit balance, but a high amount of available credit. So if you got $10,000 credit line, you wanna have at least $8,000 available credit to you.
So a rule of thumb is, for example, you have a credit card and your limit's $1,000. Try not to go over 50% of the limit. So don't go over 500 bucks in essence, if you don't, because once you go over that 50% threshold, it starts to hurt your credit. So stay under that and you should be okay. And just make sure you do make your payments on time, as Mr. King said.
How long it takes to fix it? Like, let's say if it's, we use it on the top, like 5,000.
I don't do any credit repair, but it depends. Perhaps you want to fix something. It could take up to a month if you can wait, or you can even do something called rapid rescore. Contact the credit bureau and cost around $30 to get something fixed.
These are some credit reporting agencies that are running on the board. www.experian.com, right? There's transunion.com, right? TransUnion, and then Equifax. All right. You can check your credit report once a year, right? And then see what's on the credit score, your credit report. It may be something false. Kim and Dang, those Asian common surnames are a lot, right? Kim especially. So sometimes they might mix you up with a different Kim. I found out there's a Kendra Kim out there that had a bankruptcy in 1978. That doesn't make any sense. I was born in 1978, so I couldn't even file bankruptcy, right? In 1980, someone had a car repossession in Chicago. I was 2 years old in Torrance, California. How could I be in Chicago, right? Remember, humans are the ones that are entering in credit derogatory information, right? And they might see Kendrick Kim, 1978, born in 1978, and then 1965, and the social security numbers, they might not be looking at it properly, and they just enter it on mine instead of the original person. That's where your job is to write to these credit reporting agencies and say, this is the wrong information, right? I even called them too, it's like, does it make sense to you? I was born in 78, how do I file bankruptcy when I was born in 78? Does that make sense? Right? And Wells Fargo always gives out that information in terms of here's the 3 credit agencies, some credit tips. If you're a consumer banker with Wells Fargo, you have a checking account, they provide a lot of these personal finance tools for you in terms of credit history and what to do. Any banking sites, whether it's Wells Fargo, Chase, whatever, they have that information for you. And go to these sites and go to freecreditreporting.com, get a free credit report, right? Look into it. Start now as college students. Try to practice that method of not using that full $1,000 credit line. So maybe 5 years down the line, if you talk to Mr. Dang about home buying process and things like that, you understand what's up, so to speak, right?
Who's graduating soon? Next year? Who's transferring? What are you guys majoring in?
Business.
Business. So where are you going after this?
Where am I going after this? UC Berkeley.
UC Berkeley.
Yeah.
Okay, so once you graduate from UC Berkeley, would you say that you can buy a home shortly after when you get a job? Or do you have to wait a while?
I have to wait a while
For
so I can start my career, and get it fully pretty much. 'Cause I want to be an entrepreneur. So
Okay.
I want to invest in small businesses first, and then once I build my businesses, after that, I want to buy my home.
get your own property. Okay, so what I was trying to bring up is perhaps you guys are going to be graduating sometime soon or a year from now, transferring, and you guys are going to be going into your profession, whatever you guys are trying to do. But let's just say, for example, I'm going to graduate from here, and I'm going to be a registered nurse. I'm going to graduate with a registered nurse license, and perhaps my parents have the 3% down payment for me, but I'm just going to be starting work next month, perhaps. Would I still be able to buy a home?
You have no history. You have
So-
your
so-
income isn't like documented.
So that's the point I wanted to bring up. So perhaps I have a contract with this so-called hospital as a registered nurse. They say they're gonna pay me X amount of dollars for that year. Let's say 70,000, 80,000 a year. They said they're gonna pay me that much a year already. So I'll be able to get that offer letter along with your diploma That's my history right there. If my diploma is my history, my offer letter shows how much I'm gonna get paid, I can qualify to buy a home. Yeah, and then the 3% down payment, my parents can gift it to me.
Now, Wells Fargo, even, they also take into consideration if you went to medical school or law school. And I know medical school and law school, that's a high student loan right there. But they have a way to look into the fact that your future earnings, because you're gonna be a doctor, because you're gonna be a lawyer. And based on that, they could work something out to give you a loan, even though you have that high amount of student debt going to law school or medical school. So you might wanna talk to Mr. Deng about that as well, to see what type of programs Wells Fargo has to offer. And not just Wells Fargo, there's a variety of other mortgage lenders out there that does the same thing in terms of, okay, you went to medical school, you're gonna be a doctor, you have a contract. Okay, well, this is what we can do for you. So think about that in the back of your head too.
Gentlemen, you had a question over there?
Yeah, I actually have a scenario that has a question attached to it. Say, for example, you have newlyweds, and both have their careers set, and they're gonna buy a home. But they're also planning on investing in properties. Is there any way that you could split that first-time buyer help, where say as the husband uses that first-time buyer, and maybe 2 or 3 years along the line, the wife wants to use that first-time buyer, or can you not do that because they're married? You get what I'm trying to say, the question?
The program for a first-time home buying, there's no limitation. You can buy one now and you can buy more later on as well too.
So for example, if my first time buying, I buy a home and I wanna buy another one, I'm not gonna get those same kind of help that I got when I bought the first house.
Depends, are you gonna be living in that next home that you're gonna buy?
Yeah, probably the plan is to, that first home, I'll use it as a rental and then move into that second home.
You can go ahead and take advantage of that 3% down payment program as long as you're living in the property. Yeah, if it's an investment, we require 20% down payment. Yeah, on any investment.
Did you have something to add on that, Kate?
No, exactly right.
As far as closing an escrow, you said it takes about 45 days, right? How is it that in a luxury market, they can close within 2 weeks and a week? What's the
What kind
difference?
of, what did you say, what market?
In the luxury.
The what?
Luxury market.
Luxury market.
Luxury.
I don't think you can close in 2 weeks unless it's all cash.
Well, when you say luxury market, maybe it is all cash, right?
Yeah, that's the reason.
Yeah.
And if you know any of those people, refer me, please.
Yeah, you can, there's a lot of cash.
Yeah, that's
going
why,
on
that's
right
the reason
now.
why I
And so
insist
there's
on
not
luxury
too many
market.
fees to the buyer.
So you can close it within a week if you have the money in cash then?
Probably 10 days, the
Within
statement,
the
you gotta
10
get the prelim, you gotta order the payoff, you gotta check everything over. You don't wanna rush and miss, you know.
Okay.
Escrow, well, the whole process is very legal, and there's a lot to do, because for escrow, we've gotta look at the title and, well, you know, like maybe somebody passed away, and so then the family, they're in a trust, and the family is going to act. We have to make sure they are the ones that can act, and sometimes they think they are and they're not. There's just, they gotta have the power, and that's my job. And so, we do everything to protect everything. And some aren't gonna like it, but it's very legal. And we don't want you getting in, we want you to be aware and know what the payment is, so you're not surprised. And when the market went bad, started going bad, we would see a lot of things, but didn't realize it was as big as it was. So the loan brokers would come in from small companies and they would be getting a lot of money to do the loan. But the buyer wouldn't see it because it was called a yield spread or something. But we just couldn't figure out what was going on because the buyers didn't have a lot of income. They'd started with a teaser rate, maybe 2% or whatever, so their payment was really low. Maybe the seller was paying some of the closing costs. And so then when they'd come in escrow, usually the loan broker would come when those were those kind. And they had no clue who was gonna pay the property tax, because the property tax was bigger than the house payment. You've gotta be aware, you've gotta read, you gotta know what you're doing.
That's what I would,
And it's
for I
so
was
important to
pointing
go to
out,
a good lender that's gonna show you that, because, so that's, it's just very legal.
Yeah, gentlemen, right here, you had a
Mr.
question?
Oh yeah, I'm reading your first mortgage flyer right here. What's this, when buyers complete a home buyer education course that they can reduce their interest with?
So that's an incentive. So if you take a first-time home buyer course, then their interest rate will be discounted.
Is that like offered through Wells Fargo or?
This program's only offered at Wells Fargo.
Okay, is that like a weekend class or what is that like?
No, there's online too.
Oh, okay.
Yeah, you can do it online.
Does it lower it dramatically, the interest?
By 1/8.
Oh, okay.
Correct. So if your interest rate was at 3.5%, then it'll be at 3.375. 1/8 off. It makes a difference.
Yeah.
It'll lower your monthly payment and longevity of it, but you're gonna save a lot of money.
Any other questions?
Ms. K, can you go over on ways of taking title?
Yes. The ways of taking title is if the reason for it, and you have to do it in California, is if anybody passes away. And so what happens and what tax problem you can have. So if you're a single person and you're on title by yourself, if anything happens to you, there's nothing saying what's gonna happen to that property. So you either have to have a will or get into a trust. You gotta think of that. If the other one is husband and wife or joint tenants or not married people, it could be couples, whatever, is joint tenant, that means that the remaining people on title get the house, automatically the house without going to court. But on joint tenants, sometimes there can be a tax issue. Joint tenants means that when you bought the house, maybe $100,000, and so you own half of it with your spouse or whatever, and you sell it 20 years later for, you could have a tax issue. The newest way is community property with right of survivorship. It's at the time of death, instead of going back to when you originally had bought it. And so I should have brought those, but it explains it. You can go online and check the different ways. As a married couple, there's only a couple of ways. Or you can go in a trust, but most lenders don't like to loan to a trust because it's an entity. But we can put you into a trust or back into a trust as soon as that's what closes. But they want their loan direct most of the time, right?
Most of the
Yeah,
time.
most of the time. Sometimes.
But
they'll
sometimes,
allow it.
yeah, the trust, it might get too complicated. You
Yeah.
get attorneys involved.
Exactly. And, so then there's joint tenants, there's tenants in common. Tenants in common means that whoever's on title can own a percent. Say you, and you have a friend that's on title, you can own 50% each, or 30, 70, but what that means is that is your percentage to own, and you can will it out or deed it out, that percentage. So, better hope that the person that's on with you wants that person. But that's what tenants in common is. It's a set percentage, and that person can will that part out to anybody. So sometimes investors will do it, but like Mr. Kim said, LLC is the best because it takes the liability off you personally, and they can only, there would be part members and they could only sue the units. They couldn't sue all your assets. And there's brochures back there of what escrow is with my card, so you can pick up when you leave and still wonder about.
Yes, please,
Or you
thank
can
you.
email me
Actually,
with any questions.
Mr. Chen, can you pass out the material to the audience? I noticed that when some of them left, they forgot to take some material, so.
But you, feel free to email me, tell me you came to this class and we have a question, I'll be glad to answer. Because there's lots of questions, lots of things to go over, but you don't wanna give too much because it's a confusing process. So, and anything you're thinking about, just feel free to ask us.
Same here. Yes.
Going back to the first and model incentives. Okay, you buy a home, right? At what point can you buy another one and still receive that incentive?
Okay. You could buy one as soon as 6 months. Buy one, 6 months, live in it, and then 6 months, and then after 6 months later, start shopping for a home, and then move into the next one. So same thing, 3% down payment.
Buy a home, and do I refinance the one that I'm living in right now to get, or how do I go about doing it? Because that's what I want to do. It's like I have a home, I have an investment property also. So how do I do that?
So I bought a home, I'm living in it now. 6 months later, I decide to buy another home. I'm gonna move into that home now. It better be bigger and nicer, or else it wouldn't make sense. So then your old home, your first home, you just put it out there on Craigslist that you're renting it out.
That second home, are you gonna also just put the 3% to get this amount?
Correct. You could do that as well.
Also, just to, from a realtor standpoint, I would not put it on Craigslist yourself. I would hire Mr. Owen to be your realtor to represent you to lease the home on your behalf, right? So that's what I would do. That way he could take all the liability away from you, take care of all the business that the tenants will have, and Mr. Owen will manage your property and go from there. All you have to worry about is, where's my check coming in, right? Instead of you worrying about the tenants calling you saying, my faucet's not working. Well, did you turn on the pump, the water pump? Does it work? My laundry machine's not working, what do I do? That's where Mr. Jacob Owen will deal with, as your property manager and realtor. And Mr. Dang is correct, rent it out. If your payment's $2,000, charge $3,000. Get that $1,000 extra in your pocket and help pay off the new loan that Mr. Dang gave you for your second home. That's bigger and better, hopefully, right? Hopefully that answers your question.
Yeah, I have another question for the first time buyer. Is it, if you have more than 3%, is it a better idea to give more or just stick with the 3% and?
Depends on what you're comfortable with. The more you put down, the better your interest rate will be.
Interest rate?
Correct.
And also monthly payment?
Your monthly payment will be lower as well.
No, Mr. Dang, I have a question for you. Are you guys still doing the adjustable rate negative amortization loan? Or you're mostly doing just a fixed rate, straight up conventional or FHA or even like maybe even some conventional loans that could do up to maybe as low as 5% conventional?
So, regarding to that negative amortization, that's been illegal and been out of the picture since, I believe, 2007, 8.
So I wasn't lying to you guys, those are that in my class, when I said that it's illegal now, right? I just wanted him to confirm that since he's an expert.
Okay, correct. It is illegal now. Different programs we have is, we do have on the conventional side. That program that we were talking about, the first time home buyer, minimum 3% down, that is a conventional program.
Oh,
no mortgage insurance.
Okay.
No mortgage insurance, okay? So that is a conventional program. We also have, so for 3%, the loan amount we can go up to is $417,000. If you were to put 5% down payment, we can go up to $625,000 on a conventional. And with 10%, we can go up to $1 million on a conventional. So we also offer FHA, which is one of our government loans. We also offer VA loans, and what we specialize in is jumbo loans, up to $6 million.
Thank you.
Is there any other questions about the home buying process? Any aspect, whether it's for veterans or not?
So to reiterate on that, you said for first-time home buyers, with a 3% down payment, you don't need the insurance that is under 20%?
That is correct.
Okay.
Yeah, it's built into our interest rate. In the event that you do want to pay the mortgage insurance, then your interest rate will be lower.
So then it's pretty much the same thing then?
Not really. I would tell you to look at the monthly payments. The monthly payment with the one built in would be lower. At most of the time, it will be lower than the one with the mortgage insurance.
Any other further questions? If there's no further questions involving the home buying process, is anybody interested in real estate profession at all? Whether it's a salesperson, because there's not just salesperson, there's salesperson, broker, property manager, escrow, loan officer, property development. There's all kinds of different opportunities in real estate that people don't see. People, like, just to touch up on what Professor Kim said, for being a real estate professional salesperson, you just need to take those 3 classes: real estate practices, principles, and then one of the 8 or 9 electives. I believe there's 8 elective classes. And in order to be a real estate broker, you need to take all those classes, all the electives, real estate principles and practice. And you can either have 2 years experience as being a salesperson, or you can waive that experience by having a bachelor in business and a minor in real estate. So for any of you that are interested, that's just touching up on it, if any of you are interested in being a salesperson or anything like that. Maybe if anybody's interested in being an escrow officer or a loan officer, maybe ask Ms. Grass or Mr. Dang about how they got to their position today.
Aside from that, any general questions for any of us? From either how does the appraisal factor into the loan, or any general questions at all? Any questions about ways to take title that you don't understand that Ms. Gass already explained?
This question is for Mr. Owen. This is a veteran question that I received from a Facebook message regarding it. He couldn't be here today. What are some, I don't know, veteran-specific VA questions for VA loans, VA protections for home buying that you can talk about?
The stuff that I heard about, the big one that I already said, was just everything being permitted. A little bit that I've worked with Veterans United is they pretty much specialize in just veteran loans. That they said it can be a headache a lot of times when they're looking at properties, if it's something's unpermitted or if it has like foundation issues. The seller's obviously not going to try and fix that. They'll just try and fix it up enough, but not actually get the whole permits for it. So they just said that's usually the biggest one to be looking out for, and to let your realtor know. They let you know that, hey, he's definitely going to use a VA loan or this type of loan, so you want to make sure he's finding the right properties, not showing him things that he's not going to be able to get using the VA back loan. And then, other than that, like you said, like kind of the 417 cap, and then if you're going to go up to 625, you can get a little bit more interest depending on what loan sites you go to, but it seems like if you stay under that 417, you're pretty good. That's all the general experience that I've had so far. I've only worked with 2 veterans, so I haven't hit on everything yet. I'm sure there's a lot more, but that's like I said, the basic main stuff.
And one thing I wanted to point out is sometimes someone, a neighbor, friend, whatever, will come and offer you to buy their home at a great price. Say, we don't need a realtor, we don't need title, we don't need escrow. Be very, very leery of that, because sometimes they don't own it. I have one of my clients paid cash for a property, and he's building a home on it to flip. And he went by the area the other day and just seeing what other properties he could buy. And he's got it in his phone, and he just glanced at his, and he didn't own it. Somebody, a couple months ago, this guy did, and it was an entity, did 10 different properties. So, and then put it for sale. So what he did, he signed off, the entity owned it, so he signed off as an officer of the entity. Somebody notarizes his ID, it's okay, I mean, he's sitting in front of them. So, but the problem is, now he's trying to sell it to somebody, and he says, we don't need title, we don't need escrow, just do a deed. Well, the liabilities on that buyer, because if there's any liens on it, and then when that buyer tries to sell it, he doesn't own it, he's lost all his money. I hope I haven't confused you. Just be careful, because people say, oh, we don't need to do, but usually there's a reason. And so my friend that owns the property had to pay $10,000 to go to an attorney to get a lien put on, a mechanic's lien and quiet title, so that this guy can't go out and sell it out from under him till his house is built, and then that will come off when he does sell it. But he's kind of new doing this, and what a shop, and these things happen a lot. So you gotta be just really careful when you go to.
Just know, in the home buying process, when they say that you don't need escrow, you do need escrow. And that's why Ms. Gass was here today to explain why. She's the protector, in a way, of all parties. Like, okay, this is legal, this is illegal, but all parties have to agree. Plus, think about it this way. If you got $1 million laying around, and you want to buy that house, and you decide, I'm not going to use escrow for it, are you really going to trust me, the seller, to take your $1 million and say, okay, you have my house now? Do you think I'm gonna transfer the deed or do any of that? I got $1 million and I still own the house, so I got some equity value. And you can sue me all you want, but now I got your $1 million to defend myself, right? So escrow is important to say, okay, making sure that the seller is giving you title and the grant deed to that property that you purchased. The real estate agents from the buyer's side and the seller's side are negotiating everything, making sure that the inspection of the property is done correctly, the loan officer is making sure everything's set in order, and the appraiser is making sure that your listing price is pretty accurate at $750. I don't think there's any problems, right? And the home inspector is gonna make sure everything's working order. The lights are working, the electrical outlets, turning on the light, flipping switch, the water, everything. That's important. If you don't use escrow, loan officer, agents, nothing, because you have $1 million sitting around, well, good luck to you, right? Because human nature is this. You give someone $1 million and you don't use escrow, you don't use any agents, do you think, or title, do you think that the person that received your $1 million is gonna transfer title to you? Right?
Well, they may transfer, but it's not good. Because anybody can do a deed and go record it. The county code doesn't check and see if it's valid if somebody just goes. If you don't have an escrow title, anybody can record it. So, but you don't know, and then you really don't own it, and you've lost your money. It's just, you just gotta do the process.
But when we go through you and somebody has like recorded a false deed, you check
That's
it,
what?
and if somebody recorded a false deed, but we go through you, you will discover that, and we don't have to worry about that, correct?
You have title insurance when you go through me.
Thank you.
And that's what title does, that insures you.
Okay.
Yes, Mr. Chuck?
So follow-up question, 3 questions for the panel. Any of you can answer it, but as what Ms. Gass said, what is flipping? Is it a lucrative market? And what are the processes to flipping? How do you do it?
Well, the flipping is just you buy something, fix it up a little bit and sell to make money. There's one thing that most people don't realize. If you don't live in it and you have a gain, the franchise tax board wants 3% through escrow of the gross sales price off the top. It goes towards your taxes the following year, but at that time, that's a selling expense that a lot of people don't realize. It came into effect, I think, 2002 or 2003.
So you have
So,
to
but
be in the house
flipping-
for a period of time?
Pardon?
If you acquire the property, you have to be there for a certain period of time
It can do
before
what?
you can flip it.
No.
It's like I
you're
have to
not
live in
living
it before I can flip it?
No, you don't have to live in it. You can fix it up and then 2 months later, sell it, make a good gain, but you're
But
gonna.
escrow, the, percentage is gonna go up. I mean, I'm thinking that's what you said.
I think he's asking if, how long would you have to live in it per se in order to take that 3% away from what it
You
is?
don't have to pay the 3% if you live in it. But if you live in it, there's no 3%. But it's when you don't live in it, like you fix it up, flip
You're not
it, sell it
gonna
right away,
sell
make a
it.
profit. Unless you have a loss, you're gonna pay 3%. If you do it of just the gain, it's 12 and 3%. So it's a lot. So you gotta know that that's a selling cost that a lot of people forget about. But if you live in it, there's no issue. Used to be, if you didn't live in it 2 years, we had to charge you. And so people would buy a house, young families, when it first came out, and then they had to pay, that 3% took their money away from their new house. They couldn't do it. We went to a meeting with the state, and they said, too bad, they don't get it. They changed that the following year. Because that just, but if you live in it, it's not a question.
So in essence, you live there for a minimum 2 years, you don't pay any capital gains. Should the value go up on your property and you sell?
Yeah.
If you're a single man, single woman, 250,000, up to 250,000 is tax-free. Married couples, 500,000. Within 2 years, right? But escrow's job is to disclose all this to the seller when they sell their home, right? And that's where Ms. Gass will come in and say, hey, look, we have to have a 10% withholding, we have to do this is the reason why. And she manages all that on the selling part for the sellers. And then for the buyers, whatever fees and things that they have to do, she also tells them, hey, look, these are all the buyer's fees, and this is the loan amount you're getting, and this is what's charged, and commissions are going out. Commissions are disclosed to all parties too, like how much we're getting paid as agents, right? And the loan officer has a loan document called RESPA, Real Estate Settlement Procedures Act. Well, he has to disclose how much fees he's getting as well, in terms of either it's a 1-point origination fee on the loan, which means 1% of 300,000 or 400,000, or 2 points, which is 2%. It works like that. Now back to flipping, you said, is it a good time? It depends on really in the area market you're looking to flip. And I wouldn't highly recommend going to seminars, listening to them for 1 hour, and all of a sudden you're a flipper, right? It's a really sophisticated thing, and it's a lot of high risk involved, okay? I would probably do some research on that more. I wouldn't suggest doing it, flipping. I would suggest more of keeping that house as a rental income property and get passive income from it. You had the great idea, sir. You know, you use Mr. Dang for a first-time home buyer. After 2 years, you built enough some equity, you're making some payments, you got some money, and then you say, hey, I want another loan as a first-time home buyer, and you move up and you rent out that smaller property, get some passive income along the way, and then help pay for not just that mortgage that you're on, but with the new mortgage, then you're pretty much set, right?
And you don't have to live there for 2 years though, because you're not selling anything, you're just buying, so.
You said 6 months?
6 months is good, yeah.
I had one more question. What are the differences and similarities as far as buying a home and a short sale?
And what?
And a short sale, what are the differences?
Well, the short sale means that you own more than the house is worth. So there's not as many, not too many short sales now, but I did a lot. So, say you have a house and you took equity out, used it to buy something, whatever, and then the market. So you owe the lender more, but the house appraises for, it went 200,000, 300,000, 400,000, sometimes the lenders paid. So the house has dropped in value when the market was bad, but you owe more. If they held on and could hold on with the payment and stay there, it caught up okay. But a lot of them just let it go to a short sale. So the lender has to accept taking that big hit. The buyer comes in and puts an offer to buy, probably at a good price. But the lender, the main lender has to approve it first. And that,
I have an example that, Ms. Gass was also correct in terms of a lot of people taking out the equity from their house and using it to buy boats, taking trips and things like that. So they owed more money than it's really worth. But there's a lot of people out there that didn't take out any equity. They bought at, like, let's say Fullerton, they bought a home for like $800,000, right? Actually, San Bernardino County is a better example. They bought it for $600,000, $700,000, then 2008 hit, and all of a sudden it's only worth $250,000, $300,000, $400,000. That's a big hit that Ms. Gass was talking about in terms of $400,000 difference, right? Consumers that didn't take out any equity, thinking they're just going to appreciate when the market hit, they had to sell it for $450,000, but the loan amount was $800,000. The appraisal wasn't there, so they short sold it by underpricing the property. And Ms. Gass is correct in terms of loans. The lenders actually had to approve that short sale. What's the most difficult part during that time was, it wasn't just one loan. For example, I had one case where Wells Fargo was the main lender on the first loan, and then there's a second loan that was from Chase, right? And I had to negotiate with 2 different lenders in terms of the short sale, right? And Bank of America, which is bought up countrywide, they was on the same loan, first and second, and they didn't even talk to each other, right? And when I was talking to Mr. Dang about negative amortization, what that was, you got a teaser rate, right? And the principal amount, let's say it's an $800,000 loan, and you're paying $2,000 in interest, Well, your balance of 800,000 is going up over time. So you owe more than the 800,000. You're not paying off any principal balance. You're just paying the interest, and the balance of 800,000 keeps going up. A lot of people got in trouble with that. Ms. Gass, I'm sure, have seen a lot of escrows where short sales were involved, where it's a longer process than that 45 to 60 days. Sometimes it took 90 days to a year.
Some were 5, 6
Just to get approved?
Yeah.
Just to get approved and go through close through escrow.
Because
Now-
that lender calls the shots. They tell you what commission can be. They tell
Yeah.
you what fees they're gonna pay and what they're not, what they're gonna allow. You have to follow that.
I have a question. If you, to pull it mainly for Mr. Dang, if you take a home loan out, you get a home loan, and it doesn't cover all of the home you want to buy, are you able to take a second loan from a different place or the same place? Secondary loan?
Depending on how much you're actually taking and how much you're investing into this property, we gotta go according to, the guidelines. Because if you don't have enough skin in the game, you know, why would we take the risk, so much risk of this property that you're trying to buy? So we have to see how much down payment you're putting in and how much you're gonna be taking on the second as well.
Okay, perfect. And we do have 5 more minutes, so for anybody else who has any questions, please.
I'm sorry to interrupt you, but did you have any more comments that you wanted to make based on what you said about short sale?
The reason why I brought it up is I am interested in purchasing a home, and I use a lot of the apps. Like one of them that I like is the Redfin. I'm always on that, and I saw a house that was like, the price was like, whoa, you know, and I clicked on it, and it said pending. So is that what you're talking about?
Pending means it's in escrow right now, and it's about to
So
close.
somebody put an offer.
Somebody
to
put
it.
an offer, it's in escrow, and it's about, they're going through the process of closing the escrow to transfer the seller to the buyer, to the new buyer.
But there's always a chance that could fall out, so sometimes they'll take a backup offer from you, and in case it would fall out, they would call you.
So for example, if I were to get in contact with them and say, put in an offer, maybe a little bit higher, they possibly would go
With your agent.
No, just because you put in a higher offer, it's already a set contract with
already in.
escrow. Until they back out and close the escrow and cancel it, then you can put in your offer and they could probably go with yours as a backup. That means you're like the second place kind of thing.
The contract is a legal binding contract. Once signed by everybody, it's legal. There's no taking another offer while that's going on. It's only if the buyer doesn't qualify or for some reason the escrow falls apart, then you have a chance, but only then.
So even though someone coming in with all cash, nothing really.
Nothing's gonna work unless it falls out of escrow, which means it's just they back out, they don't wanna close the transaction anymore. And then when they put it back up on the market as active, that means you can put in the offer. Sorry, that means Mr. Jacob Owen that could represent you could put in the offer
Yeah,
for you,
that's right.
right?
I have one right now, we opened escrow last week, and there were like 8 offers. And this family came in with all cash, so the seller took them. Well, today, they want to get a loan. And I had this lender call, and I said, I don't know anything about you. Well, you can't just do that, because you've got a legal binding contract. If there's gonna be a change, it has to be agreed by all parties to amend. Right now, the seller agreed, but he wants money released right now, and if they don't close it by time, that money's lost. So I left with that amendment, but I don't know if they'll agree.
What she's talking about with money released, there's something called the EMD, which is the earnest money deposit. And it's negotiated through the selling agent, the listing agent, who represents the seller, and the buyer's agent. And they say, okay, we agree to put down to the escrow $10,000, showing that good faith that we're interested in this property. And then Ms. Gass here either instructs the buyer, either wire it, come in and write a check, and then she deposits that into her trust account, EMD, and then goes from there. And based on that, it's hold into escrow. No one touches it. Now, what she's talking about is whether the seller agrees that, and the buyers agree that, yes, since you're gonna change the terms of that contract, I'm going to take out part of that EMD right now for myself as the seller, right? And if everyone agrees, which means buyer, seller, and all the agents agree, then Ms. Gass over here is allowed to release that fund. But if-
the amendment has gotta be notarized and signed before we do it. It's got, that's the only amendment that has to be notarized.
All right, for the last couple of questions.
Say the earnest money deposit was taken out, and then after that, escrow still eventually falls through. That money's just lost, or did that money get returned?
Depends, because if all parties agree to release it to them, or if all parties agree that the seller keeps it, then it's based on the instructions of the seller and buyer. Ms. Gass cannot say, well, because I'm in favor of the seller, I'm gonna just go with the seller. That's not, they're a neutral third party.
Neutral third party. But usually it'll say that it'll go towards the sales price. But this particular one, if they don't close by a certain time, because of getting a loan out, he gets to keep it. But they have said they agree, but it has, I haven't seen it signed yet. But I couldn't have drawn it without both sides agreeing. So now I'll see tonight. And that's the only one we make it notarized, because buyers have come back and said, I didn't sign that release of money, because nothing changed title. It's just, so we make that notarized so nobody can say they didn't sign.
Okay, so if anybody has any further questions, feel free to contact them. They have some cards and other information up there in the front. You could always maybe talk to them after the meeting if it's personal. I'm gonna close the meeting, and I would like to let everybody know, if you're interested in attending our next meeting, it'll be on November 17th, I believe. If the place and time is uncertain yet, but if you follow us on our website or connect with us on Twitter or Instagram, we'll have it all on there. And our next meetings, and I believe we have 2 more meetings for the semester. And thank you all for coming, and give a hand to our great.
Just to emphasize, our website is www.citrusreclub.webs.com. Our social media is all connected there. We have a YouTube channel. Mr. Chen will be posting this whole thing on YouTube as well. Okay? Please take some food and help yourselves.
Thank you everyone for coming out and having your time. I hope you had a great time for information sessions, and I hope you guys come back to our events. Yep.
Okay. You mind sending me a link?
Yeah, you'll get it.
If you go to the website, you can get.
You did it. My man,
Great job. Good job. I was surprised. And I was there today.
Please take some food on the way out.
Take some. No problem. Must follow instructions.
Yes. You must follow instructions and take as many sandwiches as with you as possible.
I'll just take the tray.
No, there's no more turkey. What? You want to say?
I know, right? It's like I've never been to Japan.
I'm gonna stop your video or what?
But if we would like to meet the president, I do autographs.
I see the president like every other day.
Thank you for attending.
Hope you enjoyed it.
Alright. Fill up the plates. Right. You want to
I will see you very soon. You said December 1st.
Where's the thing on that?
We'll probably have
Take like 5.
Don't worry.
Thank you so much. Oh, yeah. I just started to email you. Dates for the guest speaker.
Awesome. Sweet.
I'm
Okay.
going.
See you later, Jake. Thank you.
Bye, Daniela.
Bye, Kim, or bye, Kim. Bye, Professor Kim.
All right.
I'll see you later.
Thank you so much for providing food.
Yeah, we don't know, they took a lot.
Yes.
That's great.
And they, I'll read through the papers first.
Executive officers of the Real Estate Club.
Yes, sir.
We gotta make sure the room is clean before we leave tonight.
Yes, sir.
I've been staring at
Too late, I already did it.
I already did.
Thank you everybody for coming. My mouth is full, I'm sorry. Is the camera still recording?
Yeah, we got you on there chewing.
Thank you guys.
Go say goodbye.
No, you say goodbye.
No, you say, you have to.
Oh, fine. Hey everyone! I want to remind everyone that Gorky Gomez, the president of IFC, is in fact an Ecuadorian prince.
He's a what?